in terms of the panel, it's basically about what vendors are doing and will be doing to help financial firms exploit the information content of big data. Just before we start, can we have a poll basically looking at just a show of hands. Who's on the buy side here? Okay. Who's on the sell side here? Okay, so mostly buy side. And who here has looked at big data in terms of analyzing the market so far? Okay, that's actually a pretty good number, which is good. Before we start, I'd just like maybe each of the panelists to introduce themselves. I'll start by saying I'm Saeed, the co-founder of the Thalesians, and I've done some work on RavenPack data for trading FX. Steve?
I'm Steve Wilcockson, Industry Manager for Financial Services at MathWorks. I try to understand how people use our tools.
Anthony Kruger from Markit, Research Signals. It's a quant group that sits within Markit.
You've probably seen enough of me. I'm Armando Gonzalez, the CEO of RavenPack.
All right, well, thanks for the intros. And there will be a Q&A at the end, but please feel free to jump in if there are any follow-up questions throughout it. I guess the first question I'd like to ask is, where do you see the potential growth in terms of big data and financial firms? Is it, for example, in terms of alpha generation, or is it potentially in other areas, for example, in risk management or compliance? What's your feel for this? Maybe Armando.
Yeah, I mean, I still think that alpha generation is still a great opportunity for big data analytics. It's perhaps because the users are more keen to investigate big data for generating alpha than they are perhaps in trying to manage risk. And the opportunities are greater if you can predict markets. So I think that's the right incentive, which leads for more research towards that space. But there's no question that there are opportunities in other areas. And in particular, we have seen a lot of interest from the sell side at the market making level in terms of incorporating news flow and sentiment into algos, trying to pace the market, trying to decide when to enter, when to exit, risk on, risk off type strategy. So there are opportunities, no question there. I recently got an inquiry from a bank that had heard of our services involved in risk and compliance as well, trying to understand if there is any headline risk associated to names or people that they are exposed to. So yet another opportunity for financial professionals to take advantage of this type of analytics.
And Anthony, what's your feelings on it?
Yeah, at Markit, we've definitely seen more of an angle from an alpha generation perspective with clients and customers looking at new and different data sources and trying to harness those. I think also perhaps more from a regulatory side, as we see more regulation come in Europe and what's been put on the table from the ECB, that could actually drive more data being available to the market that hasn't been available before.
Yep. I see it as both, alpha and risk. To pick on some points that Nicholas made in the first session, I think big data, it applies to business challenges, business problems, as well as changing the architecture stack. And at the moment, there's a lot of consolidation of analytics, making it available more widely, more consistent, more validated. And adding a big data layer on top of that is a plus one. So having the single layer service, alpha and risk, is something we see lots of our users talk about. I agree with the comment on the ECB. Things like the Anna Credit project, for instance, is going to be very interesting. It's very traditional data oriented, but also bringing back to the previous presentation, looking at text mining, perhaps to build out inflation figures, perhaps to help with forward guidance. We see evidence of that. And the insurance sector, let's not forget them. I don't know if we have any insurance people here in the room. Raise of hands? No? But let's say some of the telematics applications that's coming from non-life, bringing hardware signals with software analytics for your risk scoring. That's fascinating.
Well, in terms of, I guess, once you have the data set, let's say you're a trader, what can data firms and vendors essentially do to help them look at the data? Is it a question of just giving traders the data and saying, get on with it? Or is there some way that you can guide them through their path?
Shall I start? I see, well, there's a couple of things. It's something we're very conscious of. I think we try to help in terms of making sure that there's good documentation with good, clear, consistent examples that help guide people not just through using the tools, but also helping them understand the problem at hand. Related to that, giving people entry-level tools. So for instance, picking up on some of the earlier presentations around machine learning, classification learner apps that gives people the opportunity to experiment with particular classification algorithms over particular data sets with advice, interactive advice as you go through.
I definitely agree. From our perspective, when we release a new data set or we work with new data sets, we'll always bring a number of white papers or make our analysts available to traders, portfolio managers, analysts who are customers, or even our prospective customers. What we've seen is, obviously everybody's time is limited, so if you can get to the pieces of information that are valuable, and if your value add as a business, as a company or buy side, is to use that data and not have to get it into a framework that is usable, then that's what you should spend your time on. So we're very conscious of that and work with our clients a lot.
Yeah, I think first of all, a vendor should bring transparency to the process. It's important for end users to understand how things are done. And while you may not share the actual code or give them the secret formulas, it's important to underline exactly how the process works so they feel comfortable that the data they're bringing into their system is actually what they think it is. And secondly, I would echo Anthony's comments about research and white papers. It's certainly important for vendors to be thought leaders, I believe, and helping understand areas where they specialize in that perhaps the customer doesn't, and conveying the ideas behind it, the research, the science behind proving that there is value in application. When you merge those together, I think that's where the real value chain comes to life and vendors truly add value to customers.
I'm going to start with a question, which I kind of guess the answer that you're going to give me at the end of it. There's always a question, should you build a solution from the bottom up if you're a financial firm, or should you buy a solution from a data vendor? And what are the advantages essentially from buying versus trying to build your own? So who wants to? I'm sure there are strong thoughts here. So.
As a vendor, I'm of course going to say you shouldn't build it, you should buy it, right? But I think when it comes to big data analytics, there truly is value in that. Because I remember back in 2007 when we launched our first product, perhaps 10, maybe 20 of the top quant funds were trying to do it themselves. That is, they were trying to implement their own natural language processing technologies. They had PhDs in-house. They hired armies of text analytic experts. And they said, nah, we're not really interested in what you do. We're doing it ourselves. It's our secret sauce. We don't want anybody to mess with it. And 2-3 years later, those same firms came to us saying, you know what, we're good at managing money, we're good at trading money, but it's extremely expensive to try to do it yourself. We prefer to outsource this. You take care of these particular problems. We want experts in those areas. So when that happens, and I think when ultimately end customers understand that there are certain expertise that you possess as a firm, and if you nurture those and take advantage of them and partner with those that can bring value in other aspects which you don't want to become an expert in, then that's when it really makes sense.
Yeah. Anthony?
I'm going to say it depends on the sophistication of the firm. And what might be big data today, in the future, could be considered quite normal, or you wouldn't need that technology. So the question of buy or build, I always think of it as an ROI, a return on your investment. And what you build today, is it fit for purpose in the future? So I'd consider that as one of the main kind of thinking points for customers.
I agree. I mean, I come from the analytics side rather than the data side, and I also expand the definition from NLP into sort of other areas.
Yeah.
But I think there's a buy-side, sell-side split. Buy-side buys more, sell-side builds more. Very rash generalization there, perhaps. I think, the buy-side can think a little bit more about what's going on under the hood. The sell side, where they've got armies of developers building. Think about why you're doing it. If it's for reasons of bureaucracy, then, maybe there's scope to buy more. But equally, we've seen some brilliant build implementations too on the sell side.
Okay, well, more mixed answers than I thought, so which is good. In terms of problems that clients tend to face when they're looking at big data, what are the most common problems? So this kind of echoing the previous question. And what have you done to help them? And this particularly relates to problems with big data in terms of the 4 Vs, which I'm sure you've heard of: veracity, velocity, variety, and also just the sheer volume of the data. Maybe dig down into each of those. So.
I can start with that one. Typically, it's unstructured data sets that wouldn't fit into a traditional framework. So we need to be creative or work with our customers in extracting the value out of that. An example, say with the volume problem, is we recently looked at a data feed that we were lucky enough to analyze at Markit that contained a couple of billion rows of data of securities lending transactions. What we built, we did almost a year of analysis on that, and at the end of it, we brought 5 factors to market that our customers, they immediately have something that they can implement and is usable, and have to go through that entire process. We also do make that available. They can look at the billions of rows of data, but they have the option, so they immediately are helped in that sense. In terms of the veracity and the variety, our process is very rigorous. I mentioned we typically would look at a data set for 6 to 12 months and understand how it's collected, how it's processed, before we'd even consider bringing something to market in a factorized form. And then on the velocity side, we tend to work on the slower end of the scale. Yeah. But recent client demand has actually seen us bring a social media API to market, which you could poll on a second-by-second basis on sentiment.
Perhaps my first answer is somewhat rudimentary in that it's clients finding time. Yeah. Just having time to look at something new, having time to explore and experiment big data or whatever that is. I don't think it's any more a question of why should I do this, but when should I do it? So prioritizing and ultimately finding the right tools that help you speed up the process of analyzing any specific stream of information or derived information from this big data universe you decide to test. So once you align those incentives and you get the right tools, whether it's MATLAB or using Markit or using other providers to help you accelerate that process, it's coming up with a hypothesis and coming up with an idea and ultimately combining the technologies and proving it out.
I think I'll just pick on 2 of the factors. Volume, to start. So, when you look at the algorithmic coexistence with the data, you've got partitionable problems and non-partitionable problems. So analytics, you can chunk data through, and others where you need to sit on the whole data set. Helping people through that path is quite an important area. It's an area where we have a lot of focus. So we have capabilities like distributed array, overloaded functions, for instance. In cases where perhaps we're dealing with, let's say, semantic analysis, or maybe in the insurance example where you talked about before, where you've got hardware engineers all contributing to the same underlying data environment and working with it, making sure that there are consistent interfaces that help the various user personas actually engage with the same data set. That goes back to the cultural issue that I think you were talking about there.
In terms of this event, much of it has been about news data, but we've also heard about kind of more unusual forms of data. For example, the macroscope data, which I'd never heard of, basically using satellite photography. There are obviously many interesting new data sources. Can you discuss any of these? What do you think data vendors can actually do to bring these to market? Like, what have you heard, or maybe stuff that your firm does, for example?
Well, I'll start, if you like. 2 things come to mind. Simulated data is one we see a lot of interest in, particularly from the quant world. Curves, scenarios, whatever it is. I know this is yeah, there's various vendors who are sort of thinking around this. So I think that's an area that probably speaks to a lot of quants in particular. I also have a former colleague who's a behavioral scientist. He helps behavioral financial scientist. He helps people evolve trading strategies. But in his previous life, he worked with decision science departments, which was data science before it got rebranded, looking at how people responded under pressure, so how much they sweated, how they responded to, let's say, ice cream or to a nice perfume. I've often wondered if you'd bring these two new worlds together of behavioral finance with actual kind of physical characteristics of people. Maybe there's a business there, but maybe there isn't, which is why he's never done it.
I've got to chip in there. I actually wrote a study a few years ago on one of these Nike Fuel bands. I actually got a trader to wear it for a week.
Right.
So, but that was more just for fun. I don't think it's tradable, so I wrote a study. But Anthony?
That's really interesting. I've heard of studies being done now on where the traders put on better trades when there's more people in the office or when there's a good mood in the office, et cetera, et cetera. But from our point of view, it's on the social media side, extracting sentiment from social media, satellite imagery, again, tracking of cell phone signals, live credit card information. An example where we use RavenPack in one of our models is, I mentioned those billion of rows of data that we analyzed to predict short squeezes. We then use RavenPack sentiment news feed to essentially re-rank those and provide more insights into short squeeze events.
I'm obviously a fan of news and social media text, but in particular, there's an area within social media that truly, at least, catches my attention. That's imagery, photography. So if you think about how much time we spend looking at photos, whether it's on Twitter, even in today's event, we had many of you tweeting and taking photos and posting those on social media. A photo can convey so much, and yet we have no technology today to extract anything meaningful from it when it comes to finance. I can certainly imagine technology extracting or classifying photos tweeted by people on industrial accidents or civil unrest, protests, potential threats to national security that we haven't even thought about, and they're all in the facial expressions of people, or they're in the amassing of crowds, stampedes, things happening, and I think photos are quite powerful if we could just capture them instantly and aggregate them and quantify them in ways that would feed into algorithmic trading. I think that would be quite powerful.
Actually, one thing is one of my friends actually looking at machine learning on video as well. I guess that's the next step, but I guess you need to crack the image before
the stills first.
Yeah, exactly, before you get to the video. I guess much of it has been talking about the situation at the moment and in the past in terms of big data. How far do you think we are from the universal adoption of big data in financial firms? And also, just as a follow-up question, where do you think we'll be in 5 years and in 10 years? And kind of a last question, do you think people have started to try to combine different forms of big data together, which is kind of the holy grail, I guess? Whoever wants to answer this, I guess it's a blue skies question. So.
I'll start. I think it's just the beginning, right? It's very early still. We have, if I look at how many clients we have and perhaps our competitors, it's just a small fraction of the overall financial space. So to me, it indicates that there's plenty of opportunity to incorporate these types of technology. Hopefully one day we'll stop talking about it as big data, and it's just data, right? There's lots of data. There's always been lots of data. It depends on when you measure it, and I'm sure in 10 years, 20 years' time, we'll be looking at masses of information that live in a cloud, and they all look small to us now. So I think that in the next 10 years, we're going to see significant progress in natural language processing. And I think that's going to be very important in trying to bridge that gap between structured data analysis and unstructured. As you might remember from the first slide I showed, the majority of the world's information is unstructured, and most of it is textual. So if we manage to get cranking on that and fix that problem and figure out ways to represent it in a more logical way, I think many new applications will arise from that. And then finally, I would say that there is a huge opportunity in not just finance, but in other industries. I'm starting to see interest in, as you said, not just insurance, but in adjacent vertical markets where perhaps corporate risk is an important part of their strategy, and yet they're not incorporating sophisticated technologies like we do in financial services, as well as sports analytics, whether it's fantasy football or looking at celebrity gossip in a more systematic way. I'm sure there's plenty of money to be made in media and in politics and other areas where, again, this sort of quantitative approach to unstructured big data would make sense.
I agree. I mean, I think Herr Österreider, I hope I've said it right. I think that is, sorry. I think presentations like that will be normal in 5-10 years' time. I think we will all be doing it. Machine learning as a means of creating structure from unstructured, whatever the data sets, whether it's images and videos, whether it's sentiment, etc. But there again, we will have reached the point of singularity. Maybe the robots will have taken over in 5 years' time. Who knows?
Well, I hope they don't teach robots to code. Otherwise, we'll be out of a job. So, Anthony.
Of course, I agree. Big data or data is here to stay. I think there is a difference between the largest, most sophisticated firms who have actually been doing this for some time. And as the cost of technology comes down, then the smaller firms or ones with maybe less of a budget will start to catch up. So I think over the next 5 to 10 years, there'll be a lot of catching up to do for some of those customers or clients, businesses out there that have only just started to think about this.
I'm aware that I'm sitting. I was just going to say it's time for questions now. If you've got a question, sir.
Can I be a bit skeptical about that? Skeptical point of view. Thank you. So, can I be a bit skeptical about all that? I've got two questions. One for you. How uncorrelated are unstructured data with respect to structured data? Meaning that if I use a simple, let's say, price action-based rule in order to trade a market, what's the added value about, including all, or for news, we already have some flavor that, okay, it provides some added value, but it's not easy. I'm still a bit skeptical. But regarding all the other metrics that we are talking about, like satellite images, well, we are far from being at a moment when we can use that. It's like we speculate when we talk like that. I think I've got, no, let's.
We'll start with that. So I think it's actually a very good question about correlation between structured and unstructured, because if you think about it, there are many unstructured data sets that are better represented in structured formats. Take stock prices. Every day you'll find headlines in whether it's Dow Jones, Reuters, Bloomberg, that convey some type of stock movement. Facebook's up 3%, or Microsoft down 7%, or Tesla down 12%. And there's commentary around why it dropped and talks a little more about perhaps the factors that are driving these stock price movements. But essentially, you could get the same information by simply looking at pricing data, right? So there's high correlation between even technologies that will structure information that is already very well conveyed in market data or fundamental data. So keeping that in mind would help you be more honest about what factors you're truly incorporating from unstructured information. It's not an alien set, if you may, even though we call it unstructured. But what is truly unstructured is what people say in general, right? When you start to think about opinions and views, guidance, and you put it all together into one time series, then I think there you'll find uncorrelated sets with some of the more traditional factors that you would find in structured data.
Isn't it also, if you look at it from a trading point of view, that if you regard structured as almost pre-released, as in it's going to be at half one, or it's going to be, the liquidity at the price is far worse. So you're actually not going to be able to trade that. But if it's unstructured and someone said, let's take the Draghi example, if he says something at 5 minutes past 3 on a Wednesday, the market pricing, the market liquidity is going to be far better. So you can actually act on that a lot better than if he says it at 1:45 when everyone's expecting it. The price will be poor anyway.
I agree. I think the timing component or the temporal dimension is extremely valuable to keep in mind in your analysis. If you look at any central banker's comments on a scheduled event, and you look at any asset or any security, you will find movement prior to the announcement. right? So there are market participants that make up their mind even before any information is conveyed. And then you can expect other market participants following a trend or simply following the herd, if you may. But if there is a comment at a university conference where no one expects it, and you have the ability to quantify that, then you can certainly expect a lag or delay in the incorporation of that information. So I think it definitely matters. Whether it's structured or unstructured, timing is a dimension that you have to keep in mind.
And I'd just like to chip in on that as well. In terms of, by implication, if you know the timing of the event, it's not a totally unknown event. So typically what you tend to see is people end up, at least within the FX options market, they'll end up over-hedging over a specific scheduled event like payrolls or something like that. So typically you'll very rarely make money buying volatility over a specific scheduled event. You make money paying for volatility when you don't know the timing or the nature of the event. Any further questions? Yeah.
So I had this discussion about the future of big data that I thought was really interesting, and I agree it's only going to get bigger, but we've got these MiFID II regulations coming in soon, and that's going to put a lot of scrutiny on what investment managers can pay for. Is there a concern among you that this sort of maybe sexier stuff, that the marginal benefit is harder to reconcile with the marginal cost? Is that a concern in your mind?
I'd say from our perspective, to some degree, yes, and Markit actually hosted a whole conference on MiFID II 2 days ago, which was quite interesting to have a whole afternoon dedicated to something that isn't set yet. But it is something that we do think about. And one comment I made at the beginning, MiFID II could provide some interesting data sets that haven't been available before either. We've heard that potentially market makers would have to publish their entire order books to the buy side.
And I think you've already seen, say, in the options market, at least in the US, where you have to basically publish which are the big strikes, essentially.
Yeah.
So you can get that data and use that. Whereas before, you would never know that. Market makers would not share that information, but now they have to. So, maybe just one last question? I know we sit between you and the beer, so it means the probability of a last question is relatively low, I'm guessing. Oh, there is a question?
Microphone now, so you're too late. So just some background for this question. In the 70s and 80s and the 90s, there were periods called the AI winters, when after many great promises of the AI community completely failed to deliver. And what followed was several years of no funding whatsoever. Do you guys feel that with all the hype, basically, around big data, machine learning going on now, that we're in danger of the same kind of event?
Well, I'd say one thing now, just as a background, is we have a lot more processing power these days. So that kind of helps to some extent.
So you're saying that the current big data machine learning bubble is based off the back of a silicon bubble, basically?
Well, not necessarily, but I'm saying you might say in the past you might have had a method to process data, but because you didn't have enough processing power, it was kind of irrelevant because you couldn't actually deliver something. So now you do have a lot more processing power. You can use the cloud, for example. So there are ways of maybe making algorithms which weren't really tractable before kind of more tractable. So it's probably not answering your question exactly, but it's facilitating the usage of them, so I say.
I think I agree with that assessment. I'm struck, it came up in a couple of the presentations today. It came up a few conversations during the breaks. We're a small data company. We're going to be a small data company. There is room for big data, but it's not necessarily for everyone. And there's still the room for the good old linear model. Econometrics is not going away. There's a lot of value in that, contributing to this whole area as well, I think.
So do you think it's overhyped then?
I don't. No, I think I agree with Saeed. I think there's meta trends there. I think big data is hyped. That would be my view. I think when it comes to data analytics and machine learning, I think there's more substance now and more valid problems to try it out on than was the case in the neural networks bubble 10 years ago or whatever.
And I'd add as well that in terms of trying to make money from trading, it's not necessarily the case that you have to have the most complicated trading strategy. You should try the simplest thing that works, and if it works, you use it. So don't overcomplicate the trading strategy, because the problem is then if you're trading money on it and it loses money, you can't understand why, then you kind of have a situation. That's the nice thing with news. You can understand why news is moving the market. It's not an abstract entity. So there's kind of an easy relationship between the market and price moves. So.
I think it's all about expectations, right? The expectations back then were quite high. We expected robots taking over the world and being smarter than we were, and doing our laundry, and at the same time doing our taxes, right?
What do you expect now?
I think right now we've lowered the bar significantly, and we try to think of AI or whatever derivative of AI as a problem-solving tool. And you define a very specific problem, and the better you are at defining the problem, the better the answers and ultimately the solutions will be. So by setting the scope and ultimately lowering the expectations, you're able to take advantage of these technologies. And I think that'll shape the next 10 to 20 years. I don't expect overhype. I don't think big data is overhyped in that respect. It's a cliche to a certain extent, but it's not like we've set the expectation, like we perhaps did even before I was born, that robots would take over the world, and Terminator could exist and could happen, and Skynet would be dominating our world today. So that's not at all what I think we would want or would expect, and because of that, we can expect that things will actually be much better than we thought before.
So I think on that note, we'll wrap up. So you heard it here first. Robots are not going to take over the world. So I hope you enjoyed the whole day and the panel. And thanks to Armando and the RavenPack team for organizing it. So, and the view is actually great now, so hopefully you can take some pictures. So, all right, thanks very much.
Thank you.